Good morning. It's 2nd of July, Thursday, and Jonathan Takadena here for MPC Markets Morning Call. Now, usually Mark's presenting, but I've been given the hot seat this morning as our fearless leader is in as a very important meeting before the market. So here we go. So the main sort of news that we've seen on our picture is all about chips, okay? And in this case, Apple, the news headlines is Apple is actually lobbying the US government to be able to buy cheaper chips from China. So that sent the semiconductor index to a bit of a tumble, 6.3% drop, worst single session drop in months after, you know, that news there. So let's just bring up the SOX index. SOXX is the code. Let's have a look at the chart. So there it is. Okay, so yeah, fairly big drop, but if you look at the overall scheme of things, still well within that uptrend there. So it'll be interesting to see if it can say break the 585 level and then even down to the 560, and then that could set up some panic in that sort of sector. While we're here, let's have a look at the two names that Micron. There you go, back to $1,000. That's been one of the main moves is in there. AMD. Let's have a look. That's been okay. So same thing broken out, but now back to into the middle of the range. So yeah, pretty much just an interesting move. I mean, like a lot of people have been trying to call tops in this move. I say that's it does make sense from an overstretched point of view, but one thing I've seen in this market is that overbought doesn't mean that it can't keep getting more overbought, or as I like to say, like just because it's expensive doesn't mean it can't get more expensive as well. And then the other bit of news is that Meta is looking to sort of lease their data center capability as well. So let's have a look at Meta while we're here. Meta platforms. There you go. So on that news, it's bounced well from the lows there, and in the post market, it's up another $1 there. So decent move for Meta overnight. So the main other bit of news is crude oil. Look at that, fresh lows. So Trump's come out and said, "Oh, we definitely got a peace deal." I've obviously lost count on how many times he can say that and claim that, but either way, he's claimed it yet again. And the market is priced in that it's actually working this time. So this is the crude oil contract. I don't know which month it is, but it's the front month. And look at that, it's at fresh new lows here at $68. And I've said it on the call or a few other sessions, is that especially here in New South Wales, I'm not too sure about everywhere else in Australia, but I'm paying roughly about $1.50 a litre for something that I was paying $1.65 for before all of this took off. So yeah, crude oil taking a beating there. So basically, so we got a good move in energy, good move in the chips. Let's have a look around at some of the others. So gold back at the lows here, $4,000. I think that this $4,000 level is going to be tested for a little while. I know I gave myself the title of the self-proclaimed gold bug within AusBiz, and everyone keeps asking me when's a good time to buy gold. I've actually been telling people, we could be range bound for a good 6 months here, and when I mean by range bound, testing the lower end of the range for a while. I still think fundamentally, because the US has not been able to fix their debt problem apart from issuing more debt or spending more, that gold will have its day there. And I was listening to for a few news sources over the web, and it looks like a lot of the retail or speculation money in China has been shut off. A lot of those paper claims have been shut off, so we could see a bit of a move. I believe mid to late July is when that takes effect there. So that's the chart of gold there. Silver itself back around that $60 level. So interesting level. I mean, the bull in me tells me that's this is a good level to get long, but I also do know that there's a lot of people sort of trapped longer. So in that situation, the market will test those weaker levels as well. Copper is the one metal or the energy transition metal, which is looking okay. Still well above the $6 psychological sort of pound level, trading about $6.16. And you can just see, the last time it traded six, it got bought up quite handsomely. And so I still think that that is the most productive out of the charts there. So while we're here, let's have a look at the indices now. So XJO, obviously we've had our, let's just, so you can just see we've had a bit, it was expecting a bit of a end of year sort of window dressing rally, but that didn't come into fruition. XJO actually sold off. It sold off even a little bit more in the SPY. And I think most of it is just driven by the banks. I'm starting to see a lot more doom and gloom. So you can see CBA back around the 160 level. Nothing too concerning, but there is a lot more news about property coming off and cooling off in the headlines, and you can see there in the banks there. So I remember posting in LinkedIn talking about so the shorting banks has been the widowmaker trade. I've actually had a few inquiries about how to actually get short the banks into this this government policy sort of effort to cool house prices. That trade has been the widowmaker trade for a long time, but I've been meaning that one of the things that you can do is you can buy put warrants on the bank or just buy puts outright as well. There are other ways as well, but that's generally the gist there. Let's keep moving on. Bitcoin, it looks like looking strong here around that 60,000 level. Hopefully, I'll take away that move. And US dollar, Aussie, still trading around that 69 level. So it looks like the so Aussie is usually a gauge for risk on, risk off, and the fact that it's back under 69 tells me that we could see a bit of a risk off sentiment, especially here in Australia. I think that we might head to the lower end of the range from here on the XJO. So keep an eye out for that. So while we're here, so what I like to tend to do is in the mornings, I use AFR as kind of like our homepage for finance here in Australia. I use CNBC as the homepage for the US markets, and I just like to see what the headlines that they're talking about. So this was an interesting article that I read last night. So in the US, and I'll just bring it up and give you the highlights. But so if you just have a look at this interesting chart here, there you go. So tech has been the main winner in sort of Q2 and Q1 of this year, but interestingly, most of it has actually been overseas. So you can just see emerging markets has pretty much doubled, whereas Europe and USA has been while there's been gains, the gains have been quite muted, and the numbers are quite staggering. So here we go. So the US tech sector added 20% in the 6 months. Obviously, their market caps are a lot bigger. But the European went up 23%. But there you go. South Korea up 100%, and Japan about 39%. So massive moves overseas. I think it's all SK Hynix, TSMC, and Samsung. And it's obviously that RAM sort of shortage that we've been covering. And if you want to find out more information about that, we've actually got a few podcasts or webinars where Kai Chen tries to break down that actual topic. He talked about the software survivors in part 2, and he's actually been on Ausbiz with Howard Coleman from Team Invest, talking about his picks in the tech sector going forward. Like, he actually had a segment going, is the tech sector a value trap going forward? So keep an eye on that for all the Ausbies fans out there. So with that, I think I've been going for, let's see, so we covered the major movers in the chip sector. So with that, I think I will actually, let's see, let's bring up some of the indices while I've got you. So let's run through the indices in the charts. So there you go. XJO pretty much been range bound. Nikkei grinding higher. Hang Seng. So this is what I found interesting. There's been a massive divergence in China. A lot of the Chinese names have sold off. So while Japan, Korea have done exceedingly well, China has sold off. So interesting moves there. So there's China itself. Euro stocks grinding higher. Wall Street, this is the Dow. Minis, heading on up there. Nasdaq. While those headlines sound bearish, the actual moves on the and price action don't show that at the moment. And the Russell grinding on higher. So it looks like it's kind of business as usual in the markets at the moment. I think that overall this market wants to keep on grinding higher. And you got to be it's a stock pickers market as well. So obviously you can just see, if you're in the right sectors, it's been a massive boom. Otherwise, if you've missed out on the being in the right sectors, it's pretty much famine time or bust. And you've seen range band action. Oh, actually, while you got me here, I will actually chat about what I talked about in the Nasdaq on the call, and that is biotech. So I had 3 biotechs on the call yesterday. I talked about Telix, I talked about Echo IQ, and I talked about Atreya. So let's bring up those charts. So here's Telix. So that's the Nasdaq one, Telix. So Telix has broken out. So there were 16 was the key level from past here, but then actually well back in the second half of 25, it's actually broken through that level and should be heading towards 18. I mean, Henry's had a $20 target on it yesterday, so I think there's plenty more juice in Telix here. So if you don't have a position, I think follow the momentum in that. Echo IQ also, we gave it a double buy there. That's been a massive move. But the thing is, don't get scared off by the moves thinking that it's all over. Echo IQ's roughly about $1 billion market cap, or just under, maybe 900 or thereabouts. But the market they're seeking in and they're piggybacking Pro Medicus. So Pro Medicus has a market cap of $22 billion. So it just shows you there's plenty more size that can show up in there. And the last one was Atreya, AYA, another biotech that I like. Similar sort of chart pattern, and in the similar space to Echo IQ, meaning that they're both in the heart. Echo IQ is more concentrated on the heart itself, coronary disease, and then Atreya is more about the arteries and the veins around the heart and plaque around it. And both are using AI for imaging. It just means that it's enabling doctors to diagnose and give results back in a much quicker pace. Both are in sort of distribution mode. They've got revenue coming in, so both look like solid picks here. If you have the patience to wait for a dip, do so. But if you are a shorter term trader, just have a look at the momentum and see if you can grab some momentum if it just breaks the highs there. So with that, I've been chatting on for a bit long. So obviously the 2 bits of chip news. We've got peace in the Middle East yet again, and crude oil is showing lows there. And have a look at some of the biotech names there. Have a look at IBB. On the ASX here, the ETF that you want to look at is CURE, CURE. I'll just bring up that chart there. You can just see that's had a massive run. But, it's got the thematic behind it. Aging population, people want to get healthier. People are more health conscious as well going forward. So there could be plenty more upside from here as well. So with that, please like and subscribe. It does help us get this content out to more viewers, and the algorithm, you know, by your likes and subscribes tells us that you do find the content valuable. And with that, hope you have a great trading day. And Jonathan Takadena for MPC Markets signing off. Next bit of content you will see is probably the Bulls versus Bears, where Finn, Mark, and Kai will be on tomorrow chatting about the markets. It's a little bit more casual and a little bit more, just general macro and general thematics there. And with that, have a great trading day, and thank you.